What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about a stock that I have not talked about on this channel before, and that is Adobe. Adobe has a very interesting business model. I think the economics behind it are very good, and I like how sticky the business model is overall. So what we are going to get into in this video is the stock is clearly down in a massive way in a single trading day, over 7.5% in one day. So we're going to go over the news behind that. Then what we are going to do is we are going to take a look at what is going forward with that news. What do we think could happen with that? What is my opinion on that? And then we're going to end off the video by taking a look at their PE ratio, because right now they're trading at a fairly, reasonable valuation. I think they could drift down a little bit further and get to a lot better valuation. And then, where could they go in the future? If we see the economics change over the next 2 years, what could happen with their PE ratio, where it could go, and what is the potential return on that? So we're going to get into all of that in this video. If you do enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. First things first, let's take a look at their chart. So we can see that they are down 7.63% in a single trading day. Over the last 5 days, we can see that they are down 10.67%. Over the last month, down 12.38%. And over the last 6 months, down 15.87%. What's very interesting is we can see that the stock has a 52-week low right now of $274.73. And that just happened back in October. And we can see over the last year, the stock is down over 30%, 31.46% in a single year. And this big fall from Adobe over the last day has came from the Fed stepping in to block their $20 billion purchase of Figma. And Figma is basically a company, we'll get into it here in a second, but basically they have a creative platform that allows people to work on projects together. So it brings people together working on a project, and really that it fits perfectly into Adobe's app suite. So the Justice Department is concerned that Adobe's acquisition of Figma could reduce options for digital software used by creative professionals. Adobe makes such software applications as Photoshop, Illustrator, Premiere, and Acrobat. And Figma actually fits very well into Adobe's overall atmosphere. We can see here Figma's website, nothing great is made alone. Figma connects everyone in the design process so teams can deliver better products faster. And when we scroll down a little bit further, you can kind of get a feel for the layout of Figma. So we could see, again, there's a couple users. This is kind of like, how Google, if you have multiple people working on a Google Doc, you can kind of see the users and who's working on it. So Figma has a similar type of layout basically for editing. So they are kind of integrating, what Google has with their Google Docs and Google Excel docs and whatnot, and basically moving that into a type of Photoshop editor type of system. And that again just fits perfectly with Adobe's overall system, because you could have someone working on a video editor or working in Photoshop and basically have multiple people from the team all working together and collaborating on one item. And at the end of the day, this acquisition being blocked is not really the end of the world for Adobe. We can see here the acquisition would shave 2 years off of the development roadmap for Adobe's Creative Cloud suite full cloud native. And basically what that is saying, that this acquisition is helping Adobe actually speed up their transition of their Creative Cloud suite onto actually becoming fully cloud. So you would think with a product name like Creative Cloud would be in the cloud already, but it is not. So the key functions of Creative Cloud runs on devices as compared to competitor Canva that truly runs in the cloud and you access via a browser. And really what this is stating is that right now, obviously Adobe Creative Cloud is very, limited to the type of systems that it's working on. What they're trying to do is make it accessible from browsers. So what they are doing is they are baking this acquisition to speed up that process and become more competitive with, their competitor Canva. But at the end of the day, they still want to push that, vision forward. So even if this acquisition is completely blocked and they can't do anything about it, they are still working behind the scenes to get to that Creative Cloud type of state where you can access any of their product suite from any browser. What all of this means is there could be a lot of short-term destruction for Adobe's stock, and we could see it continue to fall. We can already see that from all-time highs, the stock is down over 50%, and this could continue to happen. And it's very, very interesting to look at this stock and see that, it's sitting around levels that we saw in 2020. A lot of stocks have been drifting back down to their 2020 levels, and I would love to see the stock actually go down to around 275 again. So we could see it just a few months ago. The stock was sitting at 275. I think that would be a great value to start picking up the stock, and we'll see here in a second what 275 is for a PE. ratio for Adobe. But before we get into that, let's take a look at their current PE ratio. So they currently are sitting at a 22.68 forward PE ratio. We could see that a year ago they were trading as high as a 46.95, and it's just gradually drifted down from there as the stock is sold off. And to calculate their forward PE ratio, we need to look at their current estimate for earnings, and we can see that in 2024 analysts, there are 31 analysts covering the stock on Yahoo Finance. They are projecting an average EPS estimate for the year of $17.51. So with that information, what we can do is we can calculate a few different things. So the first thing that I want to point to is here is a 275 potential price target. So if the stock continues to fall all the way down to 275 and we see an earnings next year of $17.51, we would have a forward PE ratio of a 15.71, which in my opinion is incredibly low for a stock like Adobe that has a lot of growth in front of it. When you look at the S&P 500 right now, we're trading somewhere around a 20. And again, in my opinion, I think Adobe has a lot more growth in front of it than the overall S&P 500. So the other thing that we can look at, again, so we have the 17.51. Currently, the price is sitting around $320.54. So the current forward PE ratio based off that is sitting close to, an 18.31. So a little bit lower than what Yahoo Finance is showing. But we're going to use Yahoo Finance's current forward PE ratio in here. So it's sitting at 22.68. And we are going to be fairly conservative in my opinion and say that Adobe should trade anywhere from like a 25 to 30 forward PE ratio. I think that's probably fair. I think Adobe, again, has a lot of growth in front of it. They aren't an oversized company. Their market cap, we can jump back and take a look at. We can see that their market cap right now is only $146.74 billion. I think that, they could potentially have a lot of growth in front of them. They could easily get that up to maybe 500 billion over the next, 20 years. I think that's definitely a reasonable possibility. So what we could see again is basically if they were to trade up to a 25 to 30, we could see the stock move up around 10 to 32%. So that is based off the current estimate again that we have in here of if you were buying around a $320 current price and the current PE ratio is around a 22.68. However, if the stock trades down to 275 and we see the PE ratio fall down to a 15.71, what that could mean is there's a lot more potential upside. So again, if the stock were to trade up from there, so from 275 up to a forward PE of 25 to 30, we could see the stock move up to $440 to $525, which would be almost a 60% return or a 91% return. With all of that said, I do think Adobe has a very sticky business model. I think once people start using it, they really don't get away from it. There's nothing like its type of products. It is overall the best player in, photo editing, video editing, any type of editing that you want to do. Adobe is the number one place to go. So I overall like the company. I think they've been trading at a very rich valuation, over the past couple of years, and it's starting to get back to, an interesting spot. I think if we start seeing it down to around 270 to maybe 280, that's probably where I'd start to get interested in the stock and potentially start adding a position. Right now, I just think there's limited upside for the company. I would like to see, it trade lower before I really add into this company. So I'd love to hear in the comment section down below if you actually own any of Adobe. Where would you start adding a position? Where are you potentially selling out of your position? What are your kind of feelings around the stock? I'd love to hear down in the comment section. But again, always keep in mind, this is one of my first analysis, going further in depth on Adobe. I've always kind of kept an eye on it and an eye at where its PE ratio is at. But this is, one of the first times I've really looked a little bit more in depth into it. So I hope you enjoy that, but make sure you are doing your own research. Do not just buy a company because some random guy on YouTube talked about it. So always keep that in mind. But if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.